Good afternoon, everyone. You're welcome to our monthly webinar series. You are all welcome. We'll just wait a bit as other members join.
I can give you the guy's number if you want. Shogba.
You all are welcome. Please mute your mics. We're waiting, just to wait a bit. I think we'll just wait 10 minutes. So we'll just wait maybe for about 4 more minutes and then we'll begin. You're welcome again to our monthly webinar series powered by Arthur Steven Asset Management. You're welcome.
Trade. To get started, visit www.arthurstephen.com or call 0903 599 6606. Follow us on social media at ASAM Investment. ASAM E-Trade is powered by Arthur Stephen Asset Management Limited, a member of the Nigerian Stock Exchange. Arthur Stephen Asset Management Limited. Succeeding together.
You're welcome again. You're all welcome to our monthly webinar series. We're glad to have you here. I think probably just be warming up to start. Wanted to give us some time to start. This time it's interesting to also announce that we are also live on YouTube. So while we're streaming here, we're also live on YouTube, so you can share a YouTube link. You can also join us on YouTube or on Zoom. Okay, it's 3:10 now, and we said we'll give 10 minutes, so I believe we can start right away. Good evening, everyone. Good afternoon, everyone. You are welcome once again. We're happy to have you here. For those of us who are new to this series, I want to say a very big welcome to you. We have just one rule here, which is mute your mic, listen, and enjoy. That's 3 rules, actually. So just listen in, get your notepad, get your pens, be sure to leave here with, you know, a good knowledge. Nobody comes to our webinar series and leaves the same. So you are all welcome. If this is your first time, sit back and relax. You definitely are in for a lot to learn. Arthur Steven Asset Management is a Lagos-based investment management firm, and we are all duly licensed as a dealing member firm by the Nigeria Stock Exchange. And on behalf of our MD, Mr. Tunde Amolegbe, I want to say thank you for taking out your time to join us today from your very busy schedules. Thank you for taking out time to listen into our conversation. We are glad to have you, and we do hope that at the end of this, you have a lot to go back with. We have WhatsApp platforms where we share quite a lot of knowledge. We have emails. We also share a lot of knowledge via our emails. Please mute your mic. We also share quite a lot of knowledge via email. So feel free to drop your email or your WhatsApp number in the chat section, and we'll contact you and add you to those groups if you are interested. So very quickly for today, my name is Efe Riero, and I'll be anchoring this session. Adebimpe Ogundelu, who is head of our research department, will be taking us today. Bimpe will be leading us through this session. We're not going to have a very long or lengthy session. We actually want it to be interactive. So we want you to write down your questions. If you have any, while the session is going on, you can just type in your questions in the chat box or have them written down. At the end of the session, we'll give opportunity to everyone to ask questions. Today, we are looking at half-year review and outlook for the second half of the year. January to June has gone by very fast. We're going to be looking at what happened. We're going to be looking at, all the summary overview of the companies, all the financial market activities that happened in the first year. And then we look at second half of the year, what are expectations, what's it looking like for investors, what's it looking like for the companies out there. And then we can interact and ask questions about whatever fears or whatever doubts or whatever expectations we've had. So I think it's going to be a very, very insightful session. So I'm going to hand over now to Adebimpe. Bimpe, I hope you're on. I see you come on and left. So I'm going to hand over to her very soon so she can share her screen and walk us through what we've put together for this session. You're welcome once again. For those of us that just joined, this webinar series is a monthly webinar series knowledge session powered by Arta7 Asset Management. We're happy to have you on board. Like I mentioned, we have several other platforms that we normally share knowledge on: WhatsApp, via emails. If you're interested in receiving knowledge or receiving tips on how to invest, please ensure you put in your details in the chat room if you're not already part of us, so that we can add you to those platforms. So I'm going to hand over to Bimpe now so she can walk us through. Thank you. Hello, Bimpe. Just a minute. I think I saw her on just a minute ago. Okay. Okay, I see Bimpe must have gone out. Okay, apologies. She'll be joining us very soon, so she can take over. But in the meantime, while we wait for Bimpe, I mean, maybe we can take a few comments. If you have, what are your expectations from this session? What are your observations from the first half of the year? If you're an active investor or someone that is very familiar with market activities, and you want to share one or two insights, I think the floor is open while we wait for Bimpe to take over. So the floor is open. If you have one or two things you want to share, first half of the year, what has it been like? What would you like to, what are your comments? And we can take it from there. So you can just raise your hand if you have any question, or you have, anything you would love to share, and I'll give you the floor while we wait for Bimpe to sort out her issues. Thank you. Okay. Anyone interested? Anyone has a comment? First half of the year, second half of the year. What are things you've observed? What are the pointers? Okay, I have a hand. Okay, so just unmute your mic. Mr. Sahid, the floor is yours. Just unmute your mic and you can share one or two insights for the house. Mr. Sahid, you can unmute your mic, sir.
Good afternoon, everybody.
Good afternoon, sir. Thank you.
I am I'm talking from overseas, but I just been sent the performance of stocks in Nigeria today by a friend of mine in Nigeria, and I was saying that some of the unnoticed companies are posting a great returns, and those are the companies that we kind of overlook. A company like Morrison Industry, Lasaco Assurance PLC, Champion Buildings, Regency. Now, these companies can ask some advice if they are best to invest in, even with all these they are posting in terms of their performance during the year. Because a case of Regency Alliance Insurance Company, in January 4 of this year, their share price is 0.22, but as of today, 0.48. That is 118%. And in case of Lasaco, for example, which is the best performance so far I've seen in this list, my friend sent to me. In January 4 this year, Lasaco was at 0.30. At least that is 30 kobo. Now, Lasaco as of today is 1 naira 60 kobo, and the percentage is 321% for since half of this year. So I would want somebody from ASAM to please give us the reason why these companies perform this much. Is it because they change directors, or because they is it their business that is profiting so much that we can see this posting like this? Because sometimes when something is good, you have to look out and see why it's as good as this. And that question, I think, should go to Mr. Tunde, if Mr. Tunde is here, or David, if David is there.
Okay.
So I will want explanation on all this posting. Thank you.
Thank you very much. So I think your question is really in line with what we're sharing. I see that Bingbe is on. So this is really in line with what we're speaking to, and I'm sure that if Bingbe slides wouldn't speak to what you've already raised in terms of advice, in terms of what direction, what companies should we look at, why the companies perform this way, and why this company perform this way or not this way. So these are things that will definitely, so I will say welcome, Otumba Sahid, you're really in the right place. Those questions will definitely be answered here, so your expectations will be attended to definitely. So I'll hand over to Bingpe and we'll take note of that question. Bingpe will take over now, and right after her session, if we feel she hasn't treated that enough, we'll also attend to that in the question and answer session. Thank you very much, sir, for sharing your expectations, and we'll deal right after Bingpe's presentation. I believe she's going to treat that. Thank you so much, sir. Bingpe, the floor is yours.
All right, thank you so much, Efe. Sorry for the bit of delay. I was having issues with my network, but Thank God I'm up now. Good afternoon, everyone, once again. So this is Assam, and what we are going to be doing today on this episode is to review the first half of the year and also give our expectation on the remaining part of the year, is the H2 2021. So I'm going to move straight to my slides, not to waste any time further. Okay, so okay, so this is going to be outline of some of the things that we are going to be talking about today. Please, can you confirm you can see my screen? Can you see my
Yes,
screen?
yes, we can see your screen.
And you
Yes,
can hear me very well.
we can hear you.
All right, thank you so much.
We
Ife.
can't see you though.
Let me just leave the video because of the network, so we won't have so much issue with the network. That's why I decided to switch off the video. Okay, so I won't want to just come into 2021 without talking about 2020, because we know that 2020 was a notable year, and it's more of brought a new it brought a new normal into the global space at large because of the global outbreak, the COVID-19 pandemic. That was a major focus in 2020, and which shaped a lot of economies around the world, a lot of economies entering into recession after so many years of recording growth in their economy. But thank God for the positive solution that was found to this COVID-19, the vaccine that was being rolled out towards the tail end of the year. And this gave a signal and a sign of recovery for most economies around the world. And we could see that evidence in Nigerian's economy, because at Q4 2020, Nigerian economy exceeded recession after also entering recession for about 2 quarters. That was in Q2 2020 and Q3 2020, due to a lot of measures that was put in place, to curtail the spread of the COVID-19 pandemic. We also saw inflation rate stood at about 15.75% in December 2020, and the overall inflation rate as at 2020 was 13.2%. Also, the Nigerian economy was termed the best performing stock, finishing with about 50% year to date, even in the midst of the pandemic and a lot of issues. And in the midst of the pandemic, the stock was still able to outperform and come out as the best performing exchange in the economy. Also, and this was majorly attributed to the low fixed income yield during that year. The CBN, instead of supporting the economy and making sure that the economy is in a good state, even in the midst of the pandemic, took a lot of measures, which also made the fixed income space, yields in the fixed income space, to reduce significantly. And this greatly gives support to the equities markets. Also, and this was majorly attributed to the low fixed income yield during that year. The CBN, instead of supporting the economy. Hello, can you hear me? Sure that I'm hearing myself. Hello, are you with me? Pandemic took a lot of measures.
Arthur Stephen, David, please, can you mute your mic?
Okay.
Sorry about that, Bingpe. Please continue.
Okay, thank you. I think I have some distractions here. So now going into H1 2021, so we are going to review about what were the happenings in the market at those times. So let's talk about the global market first. So, and one major, I'm going to talk about two aspects of the global market, which is the crude oil price and also the global market. Why the crude oil price? Because we know that in the Nigerian economy, that is one of the major source of effects for the Nigerian economy, which is revenue gotten from crude oil. And crude oil in 2020 actually saw a little bit of happenings around the crude oil that saw the price reduced significantly. I really saw the crude oil price reduced significantly. But towards the tail end of the year also, as a result of the rollout of vaccine, there were a lot of positivity around the vaccine rollout, and a lot of a lot of countries getting the vaccine and people being vaccinated. We see that crude oil prices also began to rebound, and we could see a movement in the crude oil price so far in the year. Also, the global growth, the World Bank projected this at these various projections by the World Bank. After a lot of negative, after most economies actually entered into recession with negative growth, but due to the rollout of the vaccine and a lot of positive economic activities, the World Bank began to project a lot of growth. You can see for the total world group, you see 5.6% was projected as the world growth. And then for advanced economies, 5.4% was projected. For the emerging markets, 6%. But sub-Saharan Africa could see 2.8%, and growth for Nigeria was projected at 1.8%. So for the domestic economy, there was an improvement in the GDP growth in Q1 2021, with the economy growing at about 0.51%. And that could just buttress the fact that the Nigerian economy exited recession. In Q4, there was a growth of 0.11%. And though this growth is slow, but at least there is a possibility that this growth is steady. It's steady, 0.51% growth. And we believe that even going forward in Q2, Q3, we are expecting the Q2 figures of GDP growth, and we expect that the economy would also grow, but at the pace, we are hoping that the pace will become faster even as the year runs out, to also aid the market and aid a lot of other things around the economy. The inflation rate also started growing. So in December, I mentioned in some slides back, the inflation rate as at December 2020 was around 15%, and we saw the rate need to continue to rise to about 16.47%, and gotten to even 18%, around 18% in April. But thank God to the reduction, to the change in the base effect, we saw inflation rate beginning to reduce.
Please mute your mics, please. Please, thank you. Mute your mics, please. Thank you. Sorry, Bimpe.
I'm sorry about
the inflation rate beginning to reduce. And notably, one of the major things that drives our inflation in the economy is actually food, the food inflation. So majorly when the food inflation rate is reducing, you also see the headline inflation rate most of the time also coming down. And that is one of the cases here. And that's majorly driven by, the change in the low base effect, Okay, then moving on to we see the NG also, taking part in demands in December last year, towards the tail end of last year, as at January, the ASI by the end of January, and looking at the fact that fixed income, the yields in the fixed income space was still also very low at that time. But by February, when the fixed income space started rebounding, we saw investors also trickling out of the equities market, and taking profit taking profit. One of the major thing was taking profit after a lot of profit that has been made in the last quarter of 2020, taking profit and also moving towards a risk-free asset. And we can see the movement in the ASI. Also, notably is the Nigerian Treasury bills on the fixed income space. We see that there was rise, especially in the 364 in the longer curve, that's in the 364 days maturity. We see it really rising before it started moderating. Before it started moderating again. Okay, so let me just move, and we can see I know somebody was mentioning when I came talks that 30%, 50%. Sure, I'm going to address that question at the end of this section. So we could see some of the top 10 best stocks.
She's not audible enough.
Hello,
Can't hear
Bingpe.
her here well.
Bingpe, you're breaking up a bit. Hello, Bingpe.
These are the top 10 worst performing stocks. Hello, can you hear me?
Yeah, we lost you for a bit, like from the beginning of this slide. From the beginning of this slide, we lost you. You are breaking up.
Oh, okay, but
no, you're muted now, so we can't hear you. Bingpe, if you can hear us, you're muted, though. Your mic is muted. Please, let's mute our mics, please. Let's mute our mics, please. Please, David, as host, you need to be muting people's mics, please. Some people are logged on but not paying attention, so they're not aware they're distracting. So the host, could you please
can you hear me?
Mute mics. We can hear you, but there's someone distracting.
The host mute everybody now.
Yes.
From his own end.
Please, David, as host, could you please mute mics, or you make me a co-host to do that?
I think you should mute everybody. Let me now. Can you hear me?
We can hear you, but that noise, the person with the mic on is distracting.
Yes. Yeah, it's really distracting.
Okay, Bingpe, I think you can unmute yourself and yeah.
Okay. So, sorry about that. Okay, so I was talking about the top 10 performing stock, and I read webinar section around it, and it specifically mentioned about Lasaco. You know, most of these stocks that you don't really know, and yet they are making high waves. You know, they are growing. The prices are really growing. So I said I'm going to still speak about that more later, maybe at the end of this session. So we put 10 worst performing stocks for the half year. Okay. Okay, so what are our expectations for H2 2021? So what are these are some of the major factors that we believe would shape or give a direction to the financial market in H2 2021, and one of them is actually the direction of it play out in H1 of the year. Say a lot on how the market
Hello, Vincent, we cannot hear you clearly, please. We cannot hear you clearly now. Not really.
It's, I mean, it sounds like a network issue.
Meaning it would they'll be the numbers.
Hello.
Okay, I think we've lost Bingpei right there. Really enjoying this session. Network should allow us to be great today. Okay, Bingpei, are you back with us? We lost you. Hello,
Okay,
Bingpei.
She's not back. Good afternoon, everyone.
Good afternoon, sir.
Right. While we are waiting for Bingpei, let me quickly see if I could attempt to answer the question by Otumba Ashobon that was asked earlier, so that at least, you know, while we give Bingpei an opportunity to come back and join us. Or okay, she's back, but she doesn't have audio right now. So we'll just wait for her to come back and join us. You know, Otumba Ashobon has actually asked a very, very good question. It's a very good question because more often than not, you see that the focus of analysts regarding their recommendation tends to focus on a few what you refer to as blue chip stocks, to the exclusion of some other selected stocks. And when you look at the performance of some of these selected stocks, some of them seem to have even performed better than some of those ones that we tend to focus on. And you know, and that is true. He brought out a particular example. He mentioned Morrison Industries, that was trading at a particular price at the beginning of the year. And if you look at it now, that stock has probably gained maybe 100% as at half year. The truth of the matter is that, you know, in the stock market, like I always say, you have to know the sort of investor you are. Are you a risk taker, or are you an income taker? Are you a risk averse investor? If you are a risk averse investor, chances are that you will zero down on those stocks that you know will give you good income in terms of dividend. Now, those type of stocks are probably not the type that would record significant capital gain, because they are already fully priced in most of the time. All the information available about them is already priced into the stocks. So you are not going to see their share price rising by 50% or 100%. So you are not likely to see the price of a Nestle food, for instance, go up by 50%. because everybody already knows about that stock. Every information regarding that stock is already inside the price. But you will get good dividend on those stocks. All right? If you are a risk lover, if you are someone that does not mind taking risk, then you will not mind going into those lowly priced stocks, the likes of Morrison, the likes of all the other stock, livestock feeds, May and Baker and co. Not too many people know about those stocks already, meaning that every information available about those stocks is not already priced into the stocks. So as information is coming in, people are reevaluating the stocks, and then you can see reaction, investors' reaction in the price of those stocks, and that is why you see their share price start going up. All right, but make no mistake, those stocks are also a lot more risky than the other regular stocks that people already know about. So as you can make 100%, a 50% return on those stocks, you could very well lose a lot of money on them too. So that is really the difference. So the important thing really is for an investor to be able to know the sort of person they are, the sort of investor they are. Are you a risk lover or you are a risk averse person? And that will be what will determine whether you will be willing to go into such lowly priced stocks or not. So let me stop there to allow Bipek to continue the webinar. Maybe we'll have this. We'll continue with this conversation at the end of the presentation. Thank you.
All right, thank you so much, sir. Thank you so much for adding that. I hope you can hear me now. I'm so sorry.
We can hear you. We can hear you.
It's just the network is just misbehaving.
It's fine.
Okay.
It's
So
Nigeria.
our expectation. So I was talking about the fixed income space, giving a lot of the direction of the yield in the fixed income space. Giving a lot of direction also to the equities market in the remaining part of the year. Also, the pace at which the economy is going to recover or grow, will also give a lot of direction to the financial market. Now, I was talking about in Q4, though there has been 2 consecutive quarters recording of growth, but the growth has been quite slow, still around 0.51. But if we could see enough growth in the economy, because it's usually a saying that says that the market also should mirror on a leveled ground. The market mirrors the shape of the economy. So it means that the pace at which the economy grow would also show how the market is also going to grow in the remaining part of the year. Also, looking at the quality of earnings, the quality of companies' earnings growth, the quality of results that the companies listed on the Nigerian Stock Exchange post in their half-year result now would also determine a lot. The half-year result, the Q3 result, will determine a lot. Once once enough companies are able to make enough, have a good earnings growth to also give investors the opportunity to have confidence in this market, people would come in, invest in them, and then we see the market sees a rise. Okay, then some of our stock picks for H2 2021. So some of the things that we look into Dangote Sugar, the likes of GTCO, Lafarge, WAPCO, Seplat, and MTN. So I know someone will say that Seplat, but the price is really high. But then there are a lot of growth opportunities, even in the oil and gas space, which a lot of these companies in this sector are also benefiting from. I know once a company is growing, you also know that there is enough prospects for this economy. And then looking at the improvement in the crude oil price, and this has really supported Seplat's growth. If we look at the list that I showed so far, you see that Seplat was even part of one of the best 10 performing stocks in the first half of the year. Another thing about Seplat is it has a dual listed stock. You know, a lot of foreign investors, you know, would buy it here. You could sell it on the other exchange, on London Stock Exchange. So these are some of the things that are attributed. Then for MTN, look at the telecommunication space. There are a lot of benefit, also a lot of potential, growth potential in the telecommunication space, which you also believe that this company MTN will be able to mirror as so far. So if
Hello?
We are not hearing her again.
Hello, we can hear you
Yes.
now.
Okay.
Morning.
Bingpe, it seems we've lost you again today. Sincere apologies, everyone. I think network is not smiling today at all. Thank you all for your patience so far. I think we get Bingpe to join back in quickly.
hello, yeah,
Okay, Bingpe. Okay,
yeah,
you're back. Yeah, we lost you again.
yeah. Sorry
Okay, all
about
right.
that. Okay, so I was talking about Dangote Sugar. So you know the Dangote Sugar. So, you know, the border closure actually supported the growth in Dangote Sugar, in that a lot of small good products, a lot of small good sugar, you know, licensed sugar that were being brought into the market and dragging market share with other sugar industry were not there. And even now that the border has been opened, there are still a lot of strict measures, you know, put in place, put in place to put in place to reduce small good products into the economy, and this is really giving support to Dangote Sugar. And GT, you know, GT, the fact that they just changed their structure from a normal PLC company to an holding company and having a lot of subsidiaries, and we believe that like the likes of their payments, that is more stream of income for the company, like the likes of their payment services company, their asset management, their pension fund subsidiary will also bring in more income to this economy, and we believe in the long prospect of this. So now our portfolio strategy. Okay, sorry. Okay. But please, okay. So our portfolio strategy. So we on the long term investment goal, you know, you could have different. A lot of people have different reasons for investing. Some come, okay, maybe I just want to invest on a long term prospect. So if you are looking at investing on a long term prospect, then you want to do more of value stocks. So when we talk about value stocks, we talk about stocks with good fundamentals, stocks that have solid fundamentals, good fundamentals, and they are able to even withstand even in times of uncertainty. So these are some of the stocks that we believe in. And we also believe that
We are not hearing her again.
So I think we've lost her again. She'll be back shortly. I think the network is pretty bad today.
I hope it's not people from the village that are disturbing this network.
Oh, God pass them all.
God pass them.
All right.
Effie,
Really sorry about this.
Effie, why can't you just take it up from her? Because it look like your own devices are stronger.
More stable,
Well,
yes.
I don't have the slides. That's one. I didn't prepare for it. That's two. I don't have the slides. I'm just anchoring. But I think going forward, I think
Yeah.
we'll definitely plan for that to have a backup teacher, a backup facilitator. I think that's a very good feedback. Yeah.
Yeah, because from the beginning, your network has been so solid,
Yes.
and we can hear you clearly everywhere in the world. But for Bimpe, it's been off and on. It's
Yeah.
like some
Why
old.
I'm
different
so
places
sorry.
as well.
She's back.
She's back.
Please forgive my network. Forgive me. I don't
we don't
know.
we
Because
don't know if we can forgive this network of Big Bay.
I've done a test run before program and it wasn't like this. And then, now when it's the main show and the network is just doing what it likes. Please
You
forgive
didn't
us.
you
Forgive
didn't
me and my
appease.
network.
You need to appease the gods. All right, continue.
All right. So I'm talking about value stocks, the likes of these stocks, rewarding giving a reward even in the future term. Then you could also look at some dividend paying stocks. It's dividend paying stocks that gives dividend yield of nothing less than 5%, 5% and above. At least even if they don't really give appreciation, you can also benefit from the dividend that's going to be given. And in this time where there's going to be a lot of companies will be declaring interim dividend, so you could watch out for some stocks that once they declare their interim dividend, they give dividend yield of above 5%, and could putting into it to also benefit from the benefit and also benefit from capital appreciation that might accrue on the stock going forward. And also looking at the fixed income space, look at some short to medium term fixed income instrument, maybe the likes of some commercial papers that can give rates around 10%, and above. There are some commercial papers now that are being rolled out. You see likes of maybe 10%, 11% yield on the 180 days, 270 days. At least this rate still beats the Nigerian Treasury bills of 364 days offering 8%. And you could also putting into this
I think it's better we schedule this meeting.
I think we are actually almost at towards the end. She's already speaking to the second half. So I mean we will share the slides, and thankfully we are, and probably have it uploaded as well. So everyone can have access to it. But maybe what I would say is if we could go maybe into question and answer now, since being paid. So if I can get Mr. Molegbe, if he's on the call, I think we can maybe just proceed to question and answer session. David is MD on this call?
Yeah, yes. Yeah.
Okay, so I think I'm actually done just talking about the portfolio strategy you want to build. So if we are looking at a short-term investment goal, you want to do maybe 50% dividend paying stock, since you know that you are not staying in the market for too long, so you might not want to take such a people are not ready to take so much risk or to wait for the likes of a value stock to give you a long-term value. So you might want to do maybe a 50% dividend paying stock that give a yield of 5% and above, and 50% short-term fixed income that would also give you quality rates 10% and above for a short-term fixed income. So that will be that will be all from my end. Thank you so much, and thank you for being patient with me. Thank you. Thank you.
Okay, all right. So I'm sure there are a bit of places that a lot of us missed. So I think people that have questions, I think this is the right time to ask now. I see our comments. Thank you all for sending in. You see, Mr. Shegun says, I think one minor challenge with stock like Morrison is the liquidity issue. Okay, so the floor is open for your questions. I think one area that Bingpe went down was when she was speaking to the 10 worst performing stocks. I think that's one place that the network was pretty bad. So maybe as people type in and send in their questions, Bingpe, maybe now that your network seems a bit more solid, do you want to just go to that slide and speak to that slide where you had the 10 best performing and the stocks that didn't do so good?
Okay, so hello. Okay, I think I'm there. So what is there a question around it, or you just want me to talk more?
Just, I mean, your network was pretty bad while you were on this slide. This one slide that, you know, was really breaking a lot and we didn't hear you. So if you can brush to this while people send in questions, then that's fine.
Oh, okay, so I was talking about 10 performing stock. I remember that when I came into the webinar for stocks that, you know, you don't really look at their side, they don't really have the name, but yet they are really growing. And the likes of, I know the person also mentioned Lasaco, which is actually even topping the list in the 10 best performing stock. And as you know, most of these stocks that have been said, I think MD has actually said a lot, said all about it. And somebody also mentioned that, you know, one of the things that could be challenging about this is liquidity. And then there's also one thing that you note, that the higher the return, you know, the higher the risk. So most of these stocks also come with their own risk, you know, in the sense that, and one of the risks is actually they could be illiquid. So at the point where you want to take profit, you might not see someone to buy the stock from you, and then you end up being stuck in such a stock. And then, you know, it also depends on your investment goal. There are people come into the market for different reasons. So if it's maybe, okay, let me just quickly make profit, and even in that, you could get stuck. You could be at the point where you are saying, okay, I've made enough profit and I want to step out of the market. So one just have to also trade carefully with most of this stuff, and also look at their fundamentals. You know, even if at the point of it's you being stopped, you know, the fundamentals of some of those stocks also will go a long way, even though you don't want to invest in a stock that they are really making a lot of loss, and maybe just because of market sentiment or one slight information that might not last a while came into the market, and you are trading on that. You need to be sure on why you are trading, even though they are also giving a lot of return. You also need to be sure that there are some background that one can always fall back to, even when you get stuck in some of those stocks. So I think that's a bit on that.
All right, thank you. So do we have any questions? I don't have any in the chat box, but if you have any question, okay. Otumba, the floor is yours, sir. I hope Bingpe was able to attend to your initial question.
Yeah, partially. Let me ask now, we talk about liquidity issue with all these companies in terms of performance. Now, as they are paying dividends, they declare dividends and there's no money to back up their dividends in a stock market. That's number one question. Do I wait to answer that one before I go to the second question?
I think we can take it one after the other.
Okay.
So Bingpe, did you get the question?
Yes, I did. I don't really get the question. Can you come again, please? Can you just come again?
Effie, do you get the question? Can you help me tell her, because I look like our network is still disturbing. Can you help me tell her the question?
Yeah, our network is more stable, but I missed you as well.
Okay.
A couple of when you were asking.
Question.
You're breaking, sir.
This is the question. They performed so wonderful. The company did well, and there's no financial in the stock.
I think his network is breaking.
You're breaking a lot, sir.
Okay. But my question is, I know that all these penny stock that are trending, and they are declaring a fabulous dividends half of the year. Has there been any time in Nigeria history that stock exchange declare dividends and there's no financial backup to those dividends, or declaring all these dividends and then they don't give? Declaring all this profit and they don't give dividends. That is my number one question.
Bingbe, you got that right? Yeah.
Yes, I did. I think there is a regulation backing up declaring of dividend. So before a company can declare dividend, the company must be sure that they can afford to pay the dividend. So they would not even declare more than their earnings. And that's why you see some company like the likes of Unilever for some while now, they've not even declared dividend because they've not made enough profit. Dividend is like an excess, paying out of the excess of your profit. And there is a law backing that once a dividend is declared, especially if it is a final dividend, it actually cannot be reversed. Once the company reverses, there is a penalty for that. So I'm sure that every company, before they declare dividend, board of directors sit to declare, to look into it. Can we afford to do? Have we even made enough profit? Do we have enough? When we pay dividend, do we still have enough to retain to further grow the business? And once they see that they have that, then they can declare dividend. So it's after the money, they are sure that okay, we have this cash. And another thing I know that can come up is okay, profit is actually different from having cash. Even after they've made the profit, they also have to be sure that they have the cash to be able to fund that dividend. So I have not known of any case so far that okay, maybe a company declared dividend and then they end up defaulting in the dividend. For me, maybe since I've been in the market, I have not heard about, I've not come across such an issue. So, and I think for every company, there are also laws. NSE will also put in place regulation to make sure that such a thing doesn't happen. Thank you, sir.
Okay, thank you very much. That was first
question one.
Okay, question two.
Hello, I know a follow-up on the question Otumba asked.
Okay.
Can I have the floor?
Yes, sir. You have the floor.
Go ahead.
If you are contributing to the question, yes, sir. Yeah.
No, I'm going a step further. Actually, there is a regulation that actually prohibits a company from declaring dividend without actually paying SIM. Because initially, some years back, some companies, I don't want to mention names, some companies declare dividend 1 year down the line or thereabout. I think Mr. Amolegbe will confirm what I'm saying. Dividends were never paid. But recently, we see something that happened in ICO. Are you with me?
Yes, sir.
Yes, sir. Yes, sir.
ICO, to be specific, when you give a bonus is a script dividend, so to say. ICO sometime this year, early this year or last year, they declared some bonuses. Till today, we have not heard anything about those bonuses. And we don't even know what is going to happen. So I don't know if your MD can speak on that and the update on that ICO issue. I remember they declared 2 script issues till date, before they did even their right issue. Till date, those dividends have not, or those bonuses have not been paid. What is responsible for that? If you have any information. And we've not heard that either they are being sanctioned or anything to that effect. Thank you.
Thank you. Thank you, sir. It's indeed an insight to Otumba's question. These are questions that obviously we need to answer, and I'm sure we can discuss that here. So I think we'll take Otumba's second question, and then, okay. Yes, then we would, if the MD of Bingbe can address that, we can also speak to it and discuss it here. As we said, we'd like this to be interactive, so I like us we're contributing and asking questions so that we all live here with new insights. So Otumba, please, let's take your second question.
Okay. My second question is this: the performance of a stock exchange is an insight to the economy of a country, and is to know how the country is performing economically. If the stock exchange of that country is like what we are seeing on the board. Now, my question is, can this company declare a falsy performance? Who regulates whether what they are declaring is true or false? Because I mean, we have seen before a bogus declaration of performance that at the end of the day, the company now went belly down. And after declaring in the beginning of the year or middle of the year an excessive performance like what we are seeing now, and then before the end of the year, you see the company belly down, and they say the company probably declared bankruptcy or they're looking for financial bailouts. So is there any regulatory authorities that really confirm what these companies are declaring? Because they might be looking for money for people and innocent investors like us to say, oh, this company is doing good, and they will start putting money there, and then at the end of the year, we see that the company, to please answer this. Can you hear me? Can you hear me?
We can hear you. I mean, I don't know if it's your network or mine, but we could. Bingbe, were you able to pick up? It was breaking a lot, but were you able to?
Yes, I think I picked this question. It was asking if there is usually a check on before a company releases their earnings, such that they don't release. Maybe they say they make 5 million, and meanwhile they didn't make up to that. So there is also a regulation. So most of what the company listed on the Nigerian exchange does, there's a regulatory department, there's a regulation department. And now that the exchange is even now demutualized, the regulation department is now a subsidiary and a standalone to properly regulate. So they don't just regulate the brokers that are trading for you, they also regulate the companies listed on that. So and one of the regulation is that every report that is being released, every result, before results are being released, they are audited. Although I know that for some companies, when they are releasing the likes of maybe at first you have a timeline, okay, maybe at the point where you release an unaudited result, then you have also a timeline to make sure that you release an audited result. And so if there is an auditor checking through the results and also giving their stamp, then we can bank on that. And that is the reason for auditing an account, so that there is an inner check, there's an external check, someone coming to check, not part of the company, that can check, okay, these people said they've made 5 million. Have they really made 5 million? And once the auditor said, okay, they've really made 5 million, there is a stamp placed on it. So, and we can bank on that. And that's why you see some companies that probably maybe when there is a scandal, they hold the auditors liable, because an auditor stands to give us a backing and say, okay, this is it. So at least to an extent, knowing that that doesn't mean that maybe that cannot happen, but to a large extent, because we know that there have been cases of that even though there are auditors, companies colliding with the auditor to address their account, but to a large extent, that is being checked by the regulatory department. So on the AIICO part, I think why the bonus has still not yet been paid is because of SEC is yet to up. So there are a lot of approvals that's put in place before even they can finally pay the dividend. So they are still waiting for SEC approval. So I'm sure as soon as they get all the approval necessary for them to go ahead in paying the bonus, they will go ahead to make the payment for the bonus, or to give out the bonuses. Thank you.
Okay, thank you very much for your answer.
Question on Otumba.
Hello. One after the other, please.
Can I speak?
Yes, sir.
Yes.
Before we move into the questions on the chat here.
Yes, the truth of the matter is that before a stock is listed, there are certain commitments you have to undertake before the stock is allowed to be listed on the stock exchange. Even SEC will give their approval, as well as the Nigerian Stock Exchange. A case in point is, so when you give a result or you give information that is not in line with your performance, there are stiff penalties that are attached to that. I think we are all aware of the one that happened to Oando. At the time, they gave some information that were not corporate governance compliance issues that were not actually disclosed, because going to the market means you want to dance naked in the public. So everything, good or bad, you are supposed to give this information out. So in a situation where you give information that are not right, or you fail to give such information as at when due, there are always penalties that are attached to that. And that is what happened to Oando. I think all of us are aware of what happened to Oando. It is just of recent now they are trying to settle out of trying to have amicable settlement. Although people are still questioning that what is actually the full settlement before they are now announcing that the thing has been settled. So actually there are still penalties. And again, both the directors and the principal players in every organization, you discover we have some individuals that are held out. So in case of any wrong information, those directors and those principal actors are always held to account for whatever happens in the company. So actually, and again, if it is a financial institution, there is a double check. You say that those financial institutions, they are first of all being scrutinized by CBN. That is why you see a situation where even if your auditors have done all the things they need to do, CBN has to still approve it. And if it has to do with insurance company, Nikon has to go through that and ensure that what you are declaring is what the situation is. Then stock exchange too, they will do their own as well as SEC. So there are always check and balances. Thank you.
Thank you so much, sir, for that addition. Thank you.
Yeah, thank you very much. I think the fact that it's heavily regulated, I think that saves us a lot. I have a question here. Why stagnancy in the price growth of GTB after changing to GTCO? Please kindly shed light on this. Thanks. That question is from Adebowale Adenike.
Okay, so guarantee changing to GTCO is not something that it's not something that we would see the effect in the short time, like it's going to come all of a sudden. It's something that we are going to see over time. You know, by the time the company, they put in place the payment services company, they put in place all of the other subsidiaries, and earnings start coming into the market, you know, into the company, and the company start growing organically, then we'll see more growth, both in the company and even in the prices of the stock. So you could see that even at the point where when they changed their name from Guarantee to GTCO and the suspension that was placed on the stock was lifted from it, you could see market reacting positively to it, in that, okay, the market also welcome it, they see a future prospect in it, and so that the price went up. And at that point, people that probably bought at 28, 29 also wants to take profits from the 30 naira, and people start selling again, and that moved the price down. So it's more of like we now seeing the real price of GTB. And so as things play out, even in years to come, in times to come, then you see all of these things, these people start feeding into the prices of GT. So I think that's that. I think I've answered that question.
Yes, we have. The second question, what is the likely effect of the recent CBN policy on BDC? Most of the best performing stocks are from insurance companies. What could be responsible for this? And how do you see the market ending in 2021? So you have the question with children being paid. So you take them one after the other.
Okay, so take the
likely effect of recent CBN policy on
so
BDC.
that's actually a new policy that is being rolled out. So, you know, our own take on that, you know, they're actually, it is actually in a bid, CBN is in a bid of controlling and, you know, unifying the FX rate. So towards the beginning of the year, lately, you see that CBN actually depreciated the dollar. They depreciated the dollar further from 379 to around 410, 411. And but then when you look at the parallel market,
they depreciated the naira, not the dollar.
The naira, sorry, the naira. Yes, I wanted to say naira.
They have left us. Are we in the same country?
I'm going to Canada. They depreciated the naira, but we are still in Nigeria. They depreciated the naira from 379 to around 410, 411. But on the parallel market, you see dollar depreciating so much, rising to naira to dollar rising to around 500, 470. So this is just in a step for CBN to be able to control this. And so what happens is that on a weekly basis, there is a certain amount of dollar that CBN sells out to these BDCs on a weekly basis on auction. And when they sell it to them, they expect them. So if, for instance, CBN's standard rate is 410 or 411, and they sell to them at 411, they expect them to put maybe a minimum of 10 naira or $10 profit. So maybe they are selling naira.
2 naira.
450.
The maximum of 2 naira.
Okay, maximum of 2 naira. Thank you, sir. So if they buy at 411, maybe they are expecting them to sell around 415, 414. But what they do to retail people, to people like me and you that need dollars, for people that need dollars maybe to finance their studies abroad or to get one or two things abroad. But what they do is that they sell these dollars to the abokis, to other people on the street. So abokis majorly, and that's why you see a lot of these abokis outside. They supply them the dollar, and then the abokis sell at a very outrageous prices. And this is what CBN is just trying to curb all of this, because there are actually a lot of business. And what they want to do is that at least they know that the commercial bank, they still have more power. They can still control the commercial banks more than they can control the BDCs and all of the abokis. And so what they want to do is, okay, I'm not supplying the BDCs dollars again. Let me supply the people that I know that I can control, and I can tell them what to do, and they are going to do. And if they don't do it, I can deal with them accordingly. And so that is one of the things that they want to do. And so we'll see that even prices of dollar, because the little one that they have now, since they know that they are not going to have it, they might not have that enough anymore, they are selling it out outrageous prices. And also people also, I know that we've had experiences in the past whereby you go to the bank and maybe they say there is no dollar, or the difficulty in even accessing dollars via the commercial bank market, and that fear would also make people to want to buy at that prices. But we believe that CBN has begun to roll out a lot of policies, to ensure that the commercial banks are also ready to serve people this dollar. So we actually believe that, okay, let's see. So we really cannot say what this effect will be, but let's watch out the turn of event, the step that CBN has taken. And I believe that, okay, it's a good step, because when CBN when you are trying to make something better here, and another person is trying to make it not better at the other hand. So it's just in a bit to unify, to make the process of unifying the dollar rate, the naira to dollar rate, unifying it, and that's it. I hope I've been able to speak to that. So what was the second question?
Just a minute, Binkwe. Let me just pitch in on that very good answer you have just given regarding the new CBN policy. The truth is that we are just not operating in a normal environment. Travelex, I'm sure we all know Travelex. Travelex is a global conglomerate that is involved in foreign exchange. So if you go abroad, for instance, you need foreign exchanges. You can walk into any Travelex office and get it. Worldwide, Travelex has 1,200 offices. That's a global company. In Nigeria, we have 5,000 BDCs, 5,000 licensed by DCB.
Over 5,000.
So it's very clear that these guys aren't doing legitimate business. It is just a payoff for politicians and co to do this. So it's the easiest way. Let me just go and get $20,000 every week, add 5 naira or 10 naira on top of it, and just make easy money. All right. Unfortunately, even if they were actually even doing it and they were patriotic enough not to even be ordering the dollars, then maybe it might be sustainable. But they actually even collect these dollars and not even bother to sell it. They will audit so that the spread they can make on it can be 30 naira or 40 naira, thereby creating artificial scarcity. And everybody knows any product that is open to artificial scarcity will not be able to discover its actual value. Will not be able to, and that is why you are seeing a situation where there's simply no purchasing power parity. If those BDCs are to allow to be continue, if the government were to allow to continue to allow them to operate, we will never be able to discover the actual exchange rate of the naira to the dollar, because they will always continue to collect these dollars and hoard it. And in as much as they hoard it, we will never be able to know what the actual price of the dollar is supposed to be. Now, the banks are there. They are all over the world. They are all over the country. So wherever you are, whatever business that this BDC, whatever services that this BDC wants to say they want to offer, the banks have the facility to offer them. So if the CBN is able to actually control these banks and actually ensure that they are also not, they don't also end up in a situation where you are now taking the money away from BDC and also giving it to the banks who will also go ahead and hold the money, then we are likely to be able to actually achieve actual parity. We will actually be able to discover what the actual value of the naira is supposed to be. So on the face of it, it's supposed to be a good policy if the politicians will allow it to stay. All right. And ultimately, it will bring sanity to the whole exchange rate regime. And hopefully, one of the impacts is likely to be a reduction in inflation, because everybody knows exchange rate is a huge factor in inflation in this country. All right. The moment the exchange rate goes up, the cost of importation goes up, the price of products in the market also goes up. So if you are able to control exchange rate one way or the other, it is also likely to control inflation. And if you control inflation, it's very likely that the margins that these our quoted companies that we are trading on is likely to improve. All right, and we are likely to see them, turn out good results. So all in all, we just have to pray that the politicians actually allow this policy to stay. If it's a good policy, it is likely to bring sanity into the system. All right, and it's going to be a win-win for everybody. If again, like I said, the politicians actually allow it to operate. Thank you.
They allow it to operate. Thank you very much, sir. We have new questions. Let's just move quickly. Bingwe, I think we still have some questions from Mr. Longe that I'm not sure we've quite attended to. Most of the best performing stocks are from insurance companies. What could be responsible? And how do you see the market ending in 2021? Why? Yeah.
Okay, so for insurance company, yeah, on that, there is still, and most of them, when you see most of those stock, you see that they are around 0 naira, 1 kobo. And I'll just pick from one thing that MD said earlier. Most of these stocks that have this little amount, maybe like the likes of 0 naira, 1 kobo, there are still a lot to benefit from them. Like the real value are still yet to be, to be seen. And then one thing about insurance is also liquidity. So even when you are coming, you might see a lot of them rising just because the prices are low. You can get a stock for maybe 0 naira, 97 kobo, and you can buy like a 10,000 units. So it's virtually market sentiment. Yeah, it's not like the insurance company is not doing so well at all. Fundamentals too could play in some of these stocks, but majorly market sentiment, and the fact that they are quite cheap. they are quite cheap and they can easily go up. But one of the issues that you might face with some of those stocks is at the point of you wanting to liquidate from it, and then you don't have a buyer. And you don't want to buy a stock that is not liquid, because one of the things about this thing about investment is that it must be liquid. You can easily come in and also come out, because you don't want to tie your money down, and then when you need the money, you're not able to get your money from it. So that is it about insurance, about an insurance company. And what's the last question?
Okay, wait, just a minute, Bingpe. Let me just pitch in briefly on that issue of insurance company. Again, very good question. The insurance companies are enjoying the effect of they are enjoying base effect. And what I mean by base effect is this: the lowest a stock can be allowed to go to, the price of a stock can be allowed to go to in the Nigerian Stock Exchange is what? 20 kobo. And you'll find that most of them are already selling at 20 kobo. So he that is down need fear no fall. If you're already selling at 20 kobo, Abby, if you're already selling at 20 kobo, where else will you go now? The only place you can go is up. All right. So I mean, so they are enjoying base effect. That's the first point. The second point is also the fact that underneath that is not obvious to a lot of people, that industry is actually undergoing some changes and some reforms. Those changes and reforms are not obvious to everybody yet. You see, for instance, the regulator in that industry is now firmer in terms of the way that industry is regulated. I mean, in the past it used to be that you insure life or you insure property. You want to collect your money. If something happens and you want to collect the insurance claim, and then it takes you 6 months, 7 months. That is not happening anymore. Secondly, the investment portfolios of the insurance companies too is now being closely monitored by their regulator. So it's unlike the past where an insurance company can just collect premium from people and just invest it anyhow, such that when the people now comes to make claim, you are not able to. The insurance company is not able to pay them, thereby destroying the reputation of that industry. So there's stronger regulation in that industry now. Thirdly, that industry, the regulator have now given them a minimum capital that an insurance companies must achieve in order to carry out some certain functions. All right. So most of them have had to recapitalize. So they are much stronger than they used to be. All right. So insurance company that used to have capital of 150 million has been told by the regulator that for you to remain in this industry, you need to raise your capital to 2 billion. So they've had to go to raise capital. They are stronger companies now. So those reforms have not started they've not started showing up in terms of the returns to shareholders, in terms of declaration of dividends. But what you are saying is that some astute investors that are aware of some of these reforms and are aware that some of these companies have started carrying out those reforms have started positioning themselves now, such that maybe in a year or two, when those reforms start bearing fruits, they are able to take advantage of them. All right. So those are the things you are saying now that is playing out in the insurance company. And it's reason you will agree with me that it's easy for a stock that is selling for 20 kobo to move from 20 kobo to 40 kobo. Yeah. That's 100% return in percentage terms. So when you are doing ranking of returns, all right, you will say, okay, ICO has gained 100%. And the truth is that it could be that ICO has only moved from 20 kobo to 40 kobo. All right. So, in percentage terms, it looks huge, but in Naira terms, it might not be that large. So that is what you are saying really regarding the insurance company. And, a lot of foreign insurance companies are also coming into the Nigerian market now. all right, and they are setting new standards for even the local insurance companies. So it's so those really are what you are seeing showing up in the sort of returns that the insurance companies are delivering at the moment. Thank you very much.
Okay, so sir, before you go, MD sir, maybe just round up on the last one. How do you see the market ending in 2021, sir?
Well, I obviously don't have a crystal ball, but but I think that you see the market ended the first half of the year negative 6.3% thereabout. Like I said before, I think that the second quarter is going to be a little bit better. What I think will happen is that even if we do not end up even if we don't end 2021 in positive territory, I think that the negative will probably be in the single digit negative, maybe 1%, 2% negative. That is for the broad market. But for selected stocks, we will see some selective stocks and selective industries, putting in very good performance on the back of base effect. 2020, because of pandemic and all of that, was not very good. As Bingpe has mentioned in our presentation, a lot of industries are coming back to full production now. Also, consumers are coming back into the market. So you will see a lot of companies turning out good results as compared to what they turned out in 2020. And that is likely to drive, their share price. So you will see, individual stocks that will outperform the market in general. But, the general put together, but the market put together will probably end the year slightly positive.
Hello?
Or maybe, it's negative. But net, it's going to be, it's going to be a good year if one is able to select good stocks. If you're able to, construct very good portfolio and monitor those portfolios well, to ensure that you are very careful regarding the stocks you include in your portfolio. And if you're able to do that, you follow the advice of your stockbroker. You monitor the portfolio, and regarding the approach that I will advise investors to follow, I think that for 2020, for the rest of the year, it is better you adopt an active approach to your portfolio. So don't just buy and just sit and be waiting. All right, buy, watch the portfolio. If right, if you see certain stocks that have achieved 10%, 15% returns on the capital gain on the price you bought, actively trade them out, capture the return and look for other stocks to go in. Because if you take an inactive approach and you just buy the stocks and just sit there and watch, you could very well see those stocks gain and then they come back down again on the back of various unstable macroeconomic effect. It might not even have anything to do with the companies themselves. It might just be macroeconomic issues that could affect the share prices, gyrating inflation, gyrating interest rates, gyrating foreign exchange rate could affect share prices. But if you adopt an active approach, go into stocks, all right? If you monitor the stocks, if in 1 month, in 2 months, it has achieved 10%, 15%, trade them out. Go into other stocks that have potential like that. And by the end of you will find out at the end of the year, you will have had a very good accumulated returns from actively trading your portfolio, which is the reason why we at ASAM have made ASAM trade available to you so that you can do your own trading on your own on an active basis. You trade on your computer, trade on your phone, trade on, your laptop. And that is also the reason why we are providing you, guidance in the form of our recommendation on a weekly basis, such that we are giving you the information to enable you take the decision that will enable you trade your portfolio on an active basis. So my advice is, trade actively. Don't take a passive approach, because the macroeconomic economic indicators are too volatile for you to have an inactive approach to your portfolio. All right. But if you take an active approach, you have a very good chance of ending the year in a negative. Mm-hmm. Even if the broader market ends negative, your own portfolio is likely to be positive because you have taken the active approach.
Yeah. So I think, in summary, what you're saying is you have to be intentional and strategic with your portfolio. You can't just purchase and just go to bed. Thank you very much. Yeah. Right. So I think we're rounding up quickly.
Except of course, sorry if you don't mind. Except of course, your decision is that you think that you do not have time, and then your best bet is to just stay in your best bet is to stay in fixed income.
Mm-hmm. Okay. All right. Interesting conversation going on in the chat box. Is Financial Reporting Council still active in checking fraudulent financial reporting? Absolutely. And I think Mr. Okunola has also responded to that. Financial Reporting Council and external auditors, regulatory bodies, they're responsible to vet their accounts. Investors do not sue external auditors. That is why this persists in Nigeria, absolutely. And in advanced economies, auditors pay for authenticating fraudulent accounts. Yes, I think that's, so Muhyiddin has spoken to that already. Or Binkwe, do you have anything to add to that discussion that is ongoing on the chat box? I think that has been dealt with. Yeah. Okay, so Dr. Tony says, from a regulatory perspective, can you please give an example of a listed company that shut down and the shareholders duly compensated? That's our last question for today.
Well, I mean, there are quite a lot of there are quite a handful of banks that actually died, and they are, the NDIC is compensating both their depositors, and if they have enough money, they will compensate the shareholders. But there are processes for winding down companies, such that if the company is in debt, they will first of all pay the debt holders. All right. So the thing with shares, and I think it is important that we bear that in mind as investors. As shareholders, we are the last claimants. We are the last claimants to any profit or any asset of a company. So if, for argument's sake, a company were to wind down for any reason, the first people that they will settle are the debtors. They have first claim on the assets of that company. It is only after the debtors have been settled and maybe the regulators have been settled, whatever is left is what the shareholders can claim. All right. So for a company to have gotten to the point of winding down, to be clear, for a company to have gotten to the point of winding down, it is unlikely that the shareholders will be able to get anything. Because if the company was okay, if the company was doing well, then the issue of winding down will not arise. All right. So for it to have gotten to the point, so for instance, the banks that were wound down and their assets were transferred to NDIC, you'll find out that the NDIC concentrates on settling the depositors in the bank. They are not paying too much attention to the shareholders.
which again is the reason why, you know, stock selection is very, very important, and which is the reason why you see some investors only tend to stay with you know, solid companies. Now, those solid companies might not give them very good get very good returns in terms of capital gain, but at least they get dividend, and they know that it is unlikely that that company will be wound down. But for risk, for investors that do not mind taking risks, the risk is that, you know, you could make a kill. You could make a kill because you are buying the stocks at a very low price, but at the same time you could also lose everything. That is a fact. All right. So if you buy a stock, for instance, that is selling for 20 kobo, that stock is selling for 20 kobo for a reason, and the reason could be that the company is not doing very well. Now you have positioned yourself in the middle of two extremes. You could make a kill because the stock could go from 20 kobo to 1 naira, in which case you are quadruple your investment. At the same time, that company could die. All right. So those are the issues. So it is important for one to be able to say, okay, look, well, this is sort of investment the investor I am. I'm a risk lover. I love taking risk. If I make a kill, fine. And if I also lose my money, it's okay. All right. But if you are not a risk lover and you just want steady returns in your investment, then it is better to invest your money in those ones with very strong fundamentals. Okay. I hope that answers that question.
Yes, I'm sure. Okay, thank you very much, sir. We do not have any more questions here. Thank you very much, Bingpei. Thank you everyone for your patience with the internet breakout and all of that. Thank you for staying with us to the very end. We promised one thing at the beginning, and it was that you are not going to leave without you know, adding some more knowledge or information to your bucket, and I believe we've been able to deliver on that promise. Thank you all so much. Like we mentioned at the beginning, we're also streaming this live on YouTube, so you can always go to our YouTube account and access this video to you know, have a replay of what we've done today. Thank you so much for your participation. Thank you very much for your feedback, Lillian. Thank you so much. She said, well done. We did deliver. We spoke more of this. Definitely. We have this series every month. So look out for information on what we'll be sharing next month. We have different topics for each month. So next month will be on something else. We're also open to suggestions. So feel free to send us suggestions on what topics you want to deal with, you want us to deal with, and we'll love to take on your suggestions and break it down so that we can all learn once more. Please stay safe out there with all the Delta variant and all the different variants that are out there. Please, we want you all to stay safe. For all your investment needs, reach out to Arthur Stephen. We're here for you. Thank you for joining us, and do have a good evening. Thank you.
Thank you so much, everyone. Thanks for staying.
Thank you. Enjoy the rest of your day. Bye.
All right. Bye. Goodbye, sir. Thank you. Thank you all. If you want to be added to the WhatsApp group, please, as mentioned, you can drop your number so we can add you to our mailing list and our WhatsApp group. Thank you very much. Okay.
Okay, thank you.